morning. My name is John Rice, a local business owner and the 2013 chair of the Bradenton Area Economic Development Corporation. On behalf of the EDC and Hancock Bank, welcome to the 2013 Economic Forecast Breakfast. Unfortunately, Dr. Fishkind could not make it this morning, so I will be filling in to give the official outlook for this year. So, all is good. We will experience a record-breaking growth, and appliances, TVs, lawnmowers, and chainsaws will be the desired purchases for all in 2013. So that will conclude this morning's program. I thank you for coming, and please have a nice day. But of course, we have more. For those of you who missed the brand launch in November, I'd like to share with you now the innovative presentation of the EDC's new name, logo we enjoyed at the event. We're already off to a fantastic start in 2013 with the mandate by you to create new customers, i.e. jobs, already making 2 expansion announcements just last week, and I am told by Sharon that we have more great news to come. The EDC intends to capitalize on the momentum by aggressively marketing this community as a premier business destination to location decision makers and our existing industry when they look to expand their operations. We thank all of our EDC investors for their continued loyal support, because without you, we could not be able to achieve our goals, nor could we afford the enormous pay I receive to give these intently interesting and funny speeches. Speaking of that was a joke. Speaking of dedicated EDC investors, I'd like to extend our gratitude for the team at Hancock Bank for their generous sponsorship of the Economic Forecast Breakfast consistently for the past 14 years. I can remember they started doing this when I was a young boy, obviously. The EDC is proud to partner with Hancock Bank in bringing you Dr. Hank Fishkind. He is here, by the way. Dr. Fishkind's insights on the economic forecast for 2013. And now, please join me in welcoming Mac Caraway, president of SMR Banks Farms, who will give the invocation.
Good morning. Please join me as we bow our heads. Dear Lord, thank you for this excellent day, for this gathering of leaders, and for this opportunity to be together. Please give us the power to listen and to grow our understanding of the complex world we live in. Help us always to be civil, honest, and fair in all our dealings. Lord, we ask that you bless this business community with health, perseverance, success, and prosperity in the coming year. Most importantly, help us always to remember those who struggle and those in need, so that this business community will be known as much for its heart and generosity and true quality of life as for its business successes. We pray these things humbly. Amen.
Thank you, Mac. Not quite a bank yet, right? That's what you told me? Okay. We are pleased to recognize the public officials scheduled to join us today. Please hold your applause until all have been recognized. First, Commission Chair Larry Bussell, Commissioner Vanessa Baugh, Commissioner Betsy Manak, Commissioner John Chappie, Commissioner Robin DiSabatino, Commissioner Michael Gallen, Commissioner Carol Whitmore, Manatee County's Administrator Ed Hunsaker. From the City of Bradenton, we have Mayor Wayne Poston and Councilman Patrick Roth. From the Town of Longboat Key, we have Vice Mayor David Brenner and Town Manager Dave Bullock. Let's thank all of these public servants for taking an interest in the health of our local economy. Since 2009, 50 businesses either expanded or located in Manatee County, and those businesses are expected to create over 3,500 customers, i.e. jobs, in the next 5 years. Those customers are expected to generate over $1.7 billion in wages directly and indirectly from those jobs. These are tangible results of the Manatee County's concerted efforts to light a fire under our economic recovery and accelerating the expansion and relocation of businesses in our community. The true impact, which will be felt in the lives of thousands of locally employed residents, cannot be measured. These successes are only the beginning. They result from the vision and hard work of the EDC team, Manatee County government, the state of Florida, and the EDC's many partners in the community and region. To all of you who have taken part in these achievements and remain committed to the future of our economy, the Bradenton Area Economic Development Corporation extends its sincere thanks. And now, please join me in welcoming Mike Michella, Manatee Sarasota Area President of Hancock Bank.
Good morning. I wanted to first thank everybody for the continued support of this morning's breakfast. And when I looked at the notes here this morning and I saw that we have been sponsoring this event for the past 14 years, I thought it was around 10, but when I got to 14, my comments were going to center around having a commitment to the community and what Hancock Bank means to the community and what the community means to us and as a partner in economic development. And I thought, the testament to our commitment has obviously been the tried and true 14 years that we've been here sponsoring this and been involved with the EDC, and all of the employees who volunteer and commit their time, not only to their clients day to day and working with them, but with other organizations in our community to help make the Bradenton area a better place to live and work. And I want to thank all the employees of Hancock Bank for that continued commitment over the last 14 years. So I really appreciate their hard work and dedication. Last year I stood up here before you, and there was a couple different logos on the banner. There was a Whitney Bank logo and a Hancock Bank logo, and I made one commitment, which was that our name would change, but the people would stay the same. And I'm here today to let you know that you're seeing the same faces that you saw a year ago and before that. You're seeing the same commitment to the community, and I look forward to continuing that commitment into the future and helping you individually and your businesses grow and prosper along with our community. I'm very pleased that we have Dr. Fishkind back with us today with over 30 years of experience in economic analysis and forecasting. Dr. Fishkind is widely regarded as one of Florida's premier economists and financial advisors. His career began in the public sector, where he worked as an economist and associate professor at the University of Florida. In 1980, Dr. Fishkind became the Associate Director for Programs at the University of Florida, Bureau of Economic and Business Research. During his tenure at the university, Dr. Fishkind served for 3 years on the Governor's Economic Advisory Board. He then went into the private sector as a consultant, where he became president of M.G. Lewis Econometrics in Winter Park, Florida. In 1988, Dr. Fishkind formed Fishkind & Associates, which is a full-service economic and financial consulting firm. We are pleased to bring Dr. Fishkind back to Manatee County or the Bradenton area, to discuss what the economy has in store for 2013. So without further delay, Dr. Henry Fishkin.
Well, thank you all very much. It is always my pleasure to get to visit with you this time of year and talk a little bit about the economy. And actually, we finally have some good news, so it's particularly pleasant. Excuse my voice, I'm just getting over a little bit of a cold, but if we can have some slides and some pictures, it'll be a lot more interesting to do economics with that. All right. So a quick summary of what I see for the national economy. Current conditions. The economy is going to slow a little bit in the first part of the year. We got, a series of challenges on the fiscal front to deal with. Global slowdown also is an issue. But sort of pushing on the other side is a building recovery in the housing markets that will be a major source of strength going forward over the next few years. I believe that we're going to resolve our fiscal issues. I mean, certainly there's risk associated with that, but we seem to be making some grudging progress. I don't think it's going to be, all goodness and light, but we'll get there. What has been obscured by all the drama over the fiscal issues of our country has been monetary policy. We have the most expansive monetary policy in modern economic history. The magnitude of the stimulus is really amazing, and it is in part supporting the growth, and it will fuel very strong growth, I believe, in the second half of 2013. Now, we all know that deficit control means somewhat less stimulus and slower growth, other things being equal. It's something that we have to do. And if we can find a moderate middle path to do it, with some combination of taxes and lower spending and some control on entitlements, we'll put ourselves on a very good trajectory. But certainly, as necessary as that is, it slows growth in the short run. But I do believe growth will be significantly stronger in the second half of 13 and into 14. I believe that the uncertainties that have been engendered by the constant drama over the fiscal issues have really retarded growth in 2012. And once that veil is lifted, we will have stronger growth in the second half of 2013 and thereafter. I do think, though, interest rates are going to remain extraordinarily low, as the Fed said, until growth accelerates, the unemployment rate reaches 6.5%, or inflation rises above 2.5%, which will happen. And so we need to be ready also for rising interest rates in 2015, assuming that we get the kind of recovery that I've described to you. Now, you've known me for 14 years, so you know forecasts go awry from time to time, even mine. Variety of things that can make them go wrong. I mean, the biggest risk is that we don't resolve our fiscal issues in a meaningful way, that we do one of two things, perhaps. We either do too much, too soon, like Great Britain, driving the economy back into recession, or we do too little and allow the situation to escalate, and we create a serious problem on the financial side. Great risk there. Policy decisions in Europe can upset the situation, as could a slowdown much more dramatic in global economies than we're expecting. I don't think those are the odds-on bets, but those are the things that I worry about. In terms of Florida, a sustainable recovery is underway. It's been relatively moderate to this point. We've had significant and surprising strength in population growth, but we've had surprising weakness on the employment front. Housing markets are finally really beginning to recover here in the state of Florida. We will see much more of that in 2013 and 14. As housing markets continue to improve in the nation, that is a precursor for much more rapid population growth in Florida, because most people need to sell their home before they can move. And we're starting to see the effects of stronger housing markets in our population data here in Florida. QE4, QE3, all that monetary stuff, that's a huge benefit for Florida. Low interest rates and financing for homes are very strong stimulators for Florida. The recovery is accelerating. We're not going to get anywhere near the peaks in 2004 and 5, and that's probably a godsend. But we're going to have pretty strong growth. This is going to be a good business cycle for us based upon relatively low interest rates and an accelerating national economy. The geographic focus of growth in Florida has shifted dramatically. You see it in this market. We see it across the I-4 corridor. You see it in Miami-Dade County. The other places we see growth is where there's reasonable public-private partnerships and for those communities that want to accommodate growth. And the flip side is those communities that do not want to have growth, like some to the south of us here, are going to get their wish over this business cycle. That said, let's start our discussion this morning. Just talk about the big picture, gross domestic product in blue, inflation in red. And you can see sort of we're kind of going along at this 2.5% rate, and we just haven't broken out of that band of growth. And it's been going on now for the entire recovery process, just sort of little bit by little bit. This little bit of an increase in the third quarter here really is not sustainable. Gross domestic product is made up of consumption spending in blue, investment in red, inventories in yellow, net exports in green, government spending in purple. This is billions of dollars. So if I stack the bars up and it was like up here to 150, it'd be about 3% growth. Look at this third quarter. The big thing that went up was, one of the big things that went up was government spending. How did that happen? The Defense Department got very concerned about sequestration, so they went out and bought everything they could buy as quickly as they could buy it, and it caused GDP to go up. That's not going to be very sustainable. Secondly, look at inventories in yellow. Big increase in inventories, as in blue. See consumption going down in blue? So it caused inventories to rise because businesses produced more than what was consumed. Those are not sustainable factors. So naturally, growth would slow down a bit in the first part of this year, regardless of the fiscal issues. So we're going to have some slowing, but that's just a natural recovery process and nothing that I'm particularly worried about. But what really fell off the fiscal cliff was business investment spending. That's what fell off the cliff. You can see this dramatic fall in business investment spending. But for that, growth in 2012 would have been 1.5% higher, or instead of being 2%, it would have been 3.5%. The uncertainties manifest by our fiscal drama matter. They matter. They caused growth to be slower than would otherwise be the case, as businesses held off their investment spending and commitments until they could get some resolution of what the outlook looks like. In terms of, just an anecdote from my own practice, we're now the developers of a tradition. It's a project like Lakewood Ranch, only not quite as large. I have a $25 million budget that was approved this year for construction. I've got people to hire, but my management and ownership told me, Hank, that you got the budget, but you can't spend it until the fiscal cliff's resolved. One small anecdote, but I think it's very telling in terms of what all businesses face. So there's going to be a lot of pent-up spending that has not occurred on this investment side that we'll see this next year. But we're stuck at this 2.5% growth. This chart shows you growth in gross domestic product in blue and employment in red for 3 years after each recessionary trough. So I've taken every single recession, and I'm showing you in blue how much growth occurred 3 years after the bottom. This is the lowest amount of growth we've ever had. You'll notice also that generally the amount of growth has slowed over the last 25 years coming out of recessions. But nevertheless, this is pretty startling in terms of its situation. And it's unusual because it doesn't, you kind of stand back and say, how did that happen? Firms are very healthy. There's huge profits. We should be having more growth, not less growth. Households have rebuilt their balance sheets. Bank balance sheets are strong. Whoops. Come back. And so, we should have stronger growth given the fundamentals, but we don't. And again, I think it relates to the fiscal uncertainties. Here's job growth. It's been banging along at about 150,000 jobs a month, sometimes up a little, down a little, no trend. Enough growth to cause to allow the economy to grow at 2.5%, but not enough to break out of this cycle. And I think this is really telling. In red on this chart are job openings. In blue on this chart are hirings. Look what's happened. There's job openings. Businesses just aren't hiring because they don't want to make the commitment. If any of this is true, and I believe it is, then when this veil of uncertainty is lifted off the economy, we should see much more significant growth going forward. New claims for unemployment compensation are pointing in the right direction. If you remember the last few years, I've said to you, this is the most important leading indicator. Every Thursday morning, 8:30. As long as claims are below 370,000, it's consistent with job growth running at about 150,000 a month. You can see the effects of Hurricane Sandy. There's Sandy right there. But you can see generally this trend has been significantly lower, pointing to stronger job growth going forward in 2013. Consumer confidence, though, all of a sudden took a big dive over the last month as the drama increased over the fiscal cliff. And consumers told the surveyors that they were very concerned about that factor and were going to begin to hold back on expenditures. And we saw that in the relatively weak Christmas sales. So this stuff matters. You see business confidence turning lower as well over on the right as the fiscal drama continued in Washington. Retail sales did come up a little bit in December, but overall Christmas sales were up 3.2%, which was less than 2011. On the plus side, one of the best leading indicators for where the economy goes and sort of what the underlying strength is the Purchasing Managers Index. And you're looking at manufacturing and non-manufacturing. Any score above 50 is positive. So what we're seeing is orders and higher pricing being anticipated by the purchasing managers, which points to the underlying strength that I've described to you in the economy. Housing markets have done very well. Whether you look at new or existing home markets, sales are up significantly. They've come up out of the valley of death here to merely sort of moderate. Not great yet, but we're making good progress. And this matters a lot for the outlook for Florida, as I've said. So we're seeing increases in both new and existing home sales. And the pricing has risen. If you look at the correlation between the demand for existing homes and the rise in existing home sales, you see the price is rising as the demand has increased. So therefore, we're not only getting an increase in the activity levels, but an increase in wealth, because as existing home prices rise, everybody's a little wealthier, and that's a significant impact in the United States economy. And construction activities picked up substantially as a result. So all the housing indicators are pointing forward, and excuse me, and that's a very good sign for Florida. Not much on the price side, whether you look at the Consumer Price Index with all items in green or the core rate very, very low. This becomes increasingly important because the Fed has said they will continue their expansionary monetary policy until inflation rises above 2.5%. As long as inflation is lower, based on this, then we should see a continuation of that very stimulative monetary policy. Leading indicator for consumer prices is producer prices, so there's not much inflation coming up through the pipeline. So we probably got a good run with low prices, even in spite of the substantial monetary stimulus. Over time, we know that if an economy has excessive monetary stimulus over a significant length of time and a pickup in real economic activity, that will cause inflation. But when growth is relatively modest and there's excess capacity, as there is today, the risk of inflation is obviously very low. That's what the Fed is counting on. You want to watch the Producer Price Index for the leading indicator as to when the Fed's going to shift course. But it isn't going to be for another 18 to 24 months, in my judgment. So the stimulus package, it's really amazing. $40 billion a month of purchases of mortgage-backed securities, $45 billion a month of purchases of long-term bonds. That's $85 billion a month. It's so much damn money, I can't get my head around it. $85 billion a month of total monetary stimulus. I mean, it's really quite extraordinary. And the Fed is to be commended for that, because when other economies have faced the kinds of boom and bust in asset markets that we had occur in this country, like Japan in the 90s, they did not expand their monetary supply, and they had a decade of lost growth. Great Britain now is contracting its monetary supply in fears of inflation, driving their own economy into recession. So the Fed has really done the right thing. The question is, are they going to be able to reverse course in a deft fashion? We'll see. I think so. The Fed has said that they're going to maintain these extraordinary conditions until job markets improve. And they actually did something very unusual. They set numeric targets for monetary policy. Historically, the Fed had always talked in mumbo-jumbo or said, you know, maybe for another 18 months we'll keep rates low, whatever the heck that meant. Now they're setting real targets. And this Fed has been marked under Chairman Bernanke as doing what it says it's going to do. And so that's made monetary policy much more predictable for all of us. And the effects have been very significant. I mean, mortgage rates are almost at 3%. And actually, the spread is a little higher. Based on normal spreads, we'd see mortgage rates at 3% today. They were a little bit above that. But certainly, it's stimulated the stock market and housing markets, and those have been very beneficial for the economy. Maybe worth 1.5 percentage points of GDP growth. The big issue is what's going to happen on the fiscal side. excuse me. And I've gained some confidence, sort of seeing Congress form some bipartisan agreements. The Republicans now moving off the debate on the crisis for the fiscal cliff. I mean, I think those are very, very positive things and point to some kind of resolution. I think Congress is going to come to some middling kind of agreement. Certainly we've had payroll taxes rise by 2%, as we let the payroll tax expire as well it should. Tax cuts were raised, so some of the issues on the tax side have been at least dealt with. They're going to be dealt with again. That's not going to be the end of taxes. But I think what we're going to see is some combination of tax reform, which will result in higher taxes by closing off exemptions and loopholes. I think we'll see some modest entitlement reform. There'll be a change technically in the way in which inflation is calculated for the consumer price index, sort of this movement from the current index to the chained index. What that means is less inflationary indexing. We've been over-indexing, in fact. So we'll see some movement down in that. I think there'll be some increase in the age for full benefits, and we're certainly going to see lower defense spending. We're not going to be fighting 2 wars. The Army's going to shrink. Fortunately for Florida, we don't have any Army bases. But for those parts of the country that have big Army bases, it's going to be an Army base or 2 that's going to close. Certainly less procurement of weapons. But for Florida, what we've seen is actually some benefit flowing from all this. The F-35 Joint Fighter is in Eglin Air Force Base. That's a huge program. And we're seeing increases in simulation training because it's less expensive than training with real plant and equipment. And those things are in Florida. But these are some combination of fiscal resolution, I think, is going to come about, certainly by the first half. And that'll have very significant beneficial effects for Florida. This is the projections for interest rates. In red is the federal funds rate. It is the only interest rate that the Federal Reserve directly controls. 10-year bonds in blue, mortgages in green. You can see the very low trajectory in red until we get out into 2014 and into 2015. By then, I think we're going to be seeing stronger growth in real GDP and somewhat higher inflation. And I think that will be the trigger for the Fed to increase the funds rate. And that will push up the 10-year bond rate, and it'll push up the mortgage rates. And the spread between them will begin to contract as the short rates rise against the long rates. As the Fed begins to close off that gap, the Fed will also begin to absorb some of the liquidity it's been pumping into the system by not renewing some of the contracts to purchase some of the bonds, and thereby absorbing that ocean of liquidity. All of that will serve to drive interest rates higher, but even so, even at the end of 2015, I mean, I'm talking about a mortgage rate that's running 6.25%. So very moderate by historical standards. But still, that's a big increase in basis points from where we are today. My forecast for GDP in blue is for stronger growth through the second half of 2013, once we get past this part, 2013, and then somewhat slower growth, but still above 3% through 2015 as the Fed increases interest rates and as inflation in red rises some. So assume, as I like to say to my wife Linda at home, assume that I am right. What would this mean for Florida's economy? How would that work? Well, in terms of GDP growth, remember, in terms of the absolute numbers, we're talking about, about 4% growth in 2014, somewhat slower in 15, but this is a good period of economic growth for the national economy with relatively low interest rates for Florida. That is an environment that historically has stimulated growth in our state, and I think that's what we're going to see. Here's employment growth in Florida, year-over-year employment growth in Florida. It's averaged about 68,000 jobs on a year-over-year basis for the last 2.5 years. No trend to it. We're glad to have employment growth at 60 to 70,000 on a year-over-year basis, but the reality is it's relatively low. Where is that other chart I want? There it is. But the reality is, compared to the 10 largest states, Florida has underperformed. We've underperformed in terms of average job growth, and we've underperformed in terms of percentage of job growth. So far we have had a recovery in Florida for a number of years now, but that recovery has been very modest. We're going to break out of this moderate band in the second half of 2013 and into 2014. In terms of the growth itself, these are the sectors of growth: construction, manufacturing, finance, trade, et cetera. Over the last 12 months, 65,400 jobs, up 0.9%. That's actually a bit slower than job growth in 2011, which was up 78,000 or 1.1%. So you can see that year over year, we're really not making much progress on all of this. The leading sector has been leisure and hospitality over the last 12 months. We're seeing a significant recovery in tourism numbers. We're seeing much better hotel occupancy and higher hotel rates. Good growth in business and professional services. Much of that is in temporary health, which is included in that category. When temporary help services expand, it means businesses are testing the waters, and so that's a good leading indicator as well, but it has yet to translate into the kinds of accelerating growth that would mark the next phase of our economic recovery, but it's coming. New claims for unemployment compensation in Florida continue to point downward, which would suggest some acceleration in employment growth over the next 6 months' time. The Sarasota-Bradenton area actually has outperformed most of the rest of the state. Job growth up 1.6% here over the last 12 months compared to 0.9% statewide. Over almost 4,000 jobs created on a year-over-year basis, which is pretty significant for a market this size and makes it one of the better performing MSAs in the whole state of Florida. So we're really starting to see the recovery, and we're starting to see it across all of southwest Florida, but particularly here in the Sarasota-Bradenton area. In terms of population forecasts for the state, you can see we're finally breaking out into, some real sustained growth out here in 13, 14, and 15. And we're going to get population growth above 300,000 and significant employment growth coming out. So I'm pretty confident that if we get a resolution of the fiscal problems, that we'll see some significant benefit. But there is a substantial amount of foreclosures. Yes, the foreclosure volume has come down substantially from its peaks. But yet, the percentage growth of foreclosures is still running 10% or more above last year. And it takes more than 800 days to resolve a foreclosure in Florida. We're one of the slowest states to resolve these things because of our judicial foreclosure process, for better or worse. But the result and the implication for all of us in this room is there's this big stock of stuff that's just going through the cycle so slowly that it continues to be a drip, drip, drip of this product coming back on the market. It's not enough to hold down housing starts and sales in Florida, but it is enough, I believe, to restrain price increases. Housing starts will come up significantly over the next few years. We get 300,000 people move into the state of Florida each year. They need 150,000 houses just for themselves, plus second home demand. Now, housing starts are not going up that high, as you can see from the chart, because we're going to consume the remaining inventories. But even so, this is a pretty good housing recovery for our state. On the for Sarasota, Manatee County, as I said, 3,200 jobs on a seasonally adjusted basis, 34 in total. The leading sector has been business and professional services, and that's that increase that I described to you in temporary help services, which is the precursor to stronger employment growth over the next 12 months. Education and healthcare have been strong, leisure less so in this marketplace. New claims for unemployment compensation have gone down significantly. Blue is Manatee County. Manatee County really has seen a significant drop in those new claims, suggesting that the employment markets are tightening up here. But building permits and housing starts, this is single-family housing starts. As much as it's improved out of the bottom, look where it is. Got a long way to recover to anything normal. I mean, we are seeing improvements, but I just wanted to put that in perspective for everybody. I thought maybe I got the chart wrong when I first did it, but that's the real data. So yeah, we're enjoying this, but we're not going to go back up here either. I mean, it's not good to have 1,000 housing starts a month, but it would be nice to have 300 or 400. But we'll get there. In terms of population growth, I'm very optimistic about Manatee County, as you can see. Not going to get up to these numbers, but we're going to have some very strong growth over the next few years in this marketplace. This is a very attractive, competitive housing market. It's very attractive and competitive for people to live. Quality of life is high. Costs are relatively low by Florida standards, certainly West Coast Florida standards. The improving housing markets in the Northeast and Midwest are going to drive more population growth here. We're also going to see, and we're starting to see, some effects of Hurricane Sandy. Just as happened to us here in Florida, some people, after a terrible storm, get their insurance money and they can't rebuild. And we're starting to see some significant flows into, I'm seeing it in my project in Port St. Lucie, and we're seeing it here too. And you're going to see some of that effect that will also add to our population growth. Employment growth also in Manatee County in particular is finally going to accelerate as that accelerating population growth begins to drive housing starts and trade and business services and health care. Housing starts will move up significantly based on the projections for significant improvements in population growth. We're already seeing that. I mean, we're seeing reports of major home builders buying large tracts of land to position themselves to accommodate this growth, and I think that that will, in fact, manifest itself positively. But, you know, we do have foreclosures here. I mean, yes, they're down, but there's a significant volume of them, and as I said, that's just the filings. That's not the stock of stuff. There's a stock of stuff coming. And so the end result is it tends to keep prices down. In red, the red line on this chart is prices for existing homes. The blue is new. These blue bars are the closings for existing homes. The green are closings for new. So we're going to have a rising volume of closings because of an expansion of population growth and the higher starts, but the prices are very modestly higher because of that stock of foreclosures is going to restrain the price increases. Finally, on the non-residential side, we're finally going to see some improvement coming forward over the next few years. A little bit of a slowdown in 2015 as interest rates rise. It's going to take some time for that to build up. Employment growth has been relatively moderate in Florida and in Bradenton, Sarasota. That will accelerate in 2013 and 14, and that will finally cause some improvement in occupancy rates, and that will trigger some additional non-residential construction. So with that, I will stop, and I'll be happy to try to entertain your questions. I will get all the slides over to the EDC. We will also put them up on our website at fishkind.com. You're welcome to them, and I'd be happy to take a question or a comment from anybody if you have it. And the microphone will come. If you raise your hand up, we'll get you a mic. Way in the back, a fish figures. It's coming to you, sir. Yes, sir, I can. And I appreciate you letting me tease you. Playground voice. Yeah, a fair question. The mildly optimistic actually turned out to be fairly reasonable on target. I am much more optimistic now, in part because I think we'll get the fiscal problems resolved. I mean, that's the biggest uncertainty. If we assume that's the case, then we'll have much stronger growth in 2013 on the real side of the economy. Housing markets are clearly improving. Housing markets improving in the Northeast and Midwest plus low interest rates equals stronger population growth in Florida. We get stronger population growth, we'll have a much stronger economy. So I'm quite confident, assuming we get past the fiscal issues. Thanks for the question. Question, comment from anybody? Down here in the front? Yes, sir. If you want to stand up, I could probably hear you.
Because we are really short. Thanks. We're really short on hotel rooms here. Did your model also take into effect that we could see growth in the hotel sector?
Yes, there is a projection for hotels, but it's primarily the data show for new construction. So that big renovation here wouldn't show up in the data for new hotel construction. The hotel market here is underserved. And so I do think there's room for probably 200 to 300 rooms a year of both full service and limited service hotel. There's still more room even on the I-75 corridor for it. Question, comment? Yes, sir, please.
Potential for entitlement reform might have on the recovery, whether it's health care cutbacks or even pension reform at the local level?
Yeah, excellent question. Generally speaking, reducing spending on entitlements reduces demand, generally speaking. And so we sort of have that on the one hand, but reducing the uncertainty relative to what we're going to do is a benefit. For Florida in particular, the real issue now is what will the state do relative to expanding Medicaid? Is the state going to take the federal bargain and expand Medicaid dramatically or not? That has very significant effects on Florida. The numbers are huge. We're talking about $12 to $15 billion worth of additional health care spending, 95% of it's financed by the federal government. So if Florida should take that deal, we would see a great expansion and stimulation, actually, from this entitlements reform, ironically, flowing into the healthcare system in Florida. If we don't take the deal, then what we'll see is some modest negatives from entitlement reform. We all are going to pay for the healthcare program. We're paying for it now, whether we decide to take the federal stimulus or not. Some change in Social Security, some change in the CPI adjustment for Social Security. That's a significant negative for some parts of Florida because there's lots of retirees. So on balance, probably a bit negative. Could be a positive if we decide to take on the Medicaid expansion. Time for one more if anybody has it.
Based on your financial analysis, what recommendations would you make to our state legislators?
I think there's a number of things. I mean, I think Florida would be well served to expand its Medicaid coverage for a variety of reasons, both healthcare and economic. I think our state desperately needs reform of its sales tax system. I worked many years with John McKay to try to do that. We were unsuccessful. But our state sales tax system and our state's tax structure in general does not serve us well. And we need to reform that system and make it serve us better. And if we could do something along those lines, that would be the most important thing. This is the time to do it. We have rising revenues, a stronger economy. The state's going to be surprised on the upside with revenues. And stabilizing of the housing markets helps our local governments. So if we're going to start to think about tax reform, this would be the time to do it. Thank you all very much. Go out, do good, make some economy. It's a pleasure to be with you.
Thank you, Dr. Fishkind. We really appreciate the insight. And on behalf of the Bradenton Area Economic Development Corporation and Hancock Bank, I want to thank you again for your continued support of this event. And we all look forward to working with you in 2013 to making this the best possible year. So thank you very much. Enjoy the day.